Hey, welcome back to this month's market update, where today we're going to talk about home prices and affordability. So Eric Hatch here with Century 21, and welcome to our monthly update here that I want to share with you. And I love this graph. I know we've shared it before because I can see that we've been ticking down a little bit in the interest rate, probably the last 5 or 6 weeks in a row. We've got kind of at least four of those of the five. Actually, the interest rates actually were ticking on a downward momentum, which was great. As I remember, I showed you guys this before, that the demand based on the rate environment. So when the rates get up into that sevens, you can see that you can literally almost turn the phone off and things just aren't ringing as fast as they would be. But once this gets down into this kind of area right here where buyers feel like, hey, this is a good time, they're going to be jumping into it. And I'll tell you right now that the phones have been ringing like crazy. There's more buyers. I've been showing buyers a lot lately. So I love that graph to kind of see and show that when it gets into that 6.5 kind of range, then it's a good place and a good time for buyers to jump into the market. So let me share this with you here first on our chief economist here, Sam from Freddie Mac. He said, turbulence in the financial market has put a significant downward pressure on rates, which should benefit borrowers in the short term. So I want to share with this about what is really happening with home prices. Recently, I've been seeing some amazing home prices coming on the market and putting in first-time home buyers to seasoned buyers, both sides, from the high level to even the more affordable homes. There are amazing values that are coming on the market at this moment. But let's step back in time here for a few minutes. Let's go back in October, November, December of last year, where you could see these articles. And I shared this video then of the articles of U.S. housing prices could plunge 20%. There are now 210 U.S. household markets that could be at risk at 15% to 20% home price declines. Or in the CBS said that home prices could fall as much as 20% next year. So now we are gathering more and more data to kind of understand where we were at. And this is going to be kind of exciting for most of us to kind of see, because yes, the market still has been a little bit up and down, but at the same time, you can see where they were so predicting all this negative news, that what did the negative news do? It kind of put a scare into people's thought process and didn't put clarity to the market. So what did a lot of buyers decide to do? They decided to kind of, you know what, I'm going to hold for a little bit and let's just go ahead and wait. And maybe I'll wait till the interest rates go back down, or this hysteria kind of changes and shifts. But look what now that we can actually see here from the year to over year appreciation. So all these big cities right here, that they've actually been appreciating pretty heavy. So if you're looking at moving out of California and certain areas, then you can see. And yes, California and the San Francisco area especially, have the biggest decline in market there. And you can actually look at this because the declines in the West are due to the tech industry, the slowdown and severe lack of affordability after decades of undersupply. So you can see, going back to that slide, yes, some of the West Coast we are, and I'm going to continue showing some of that for you as well. But you can look at the region. You look at these region here from FHFA, that you can see that you've got Pacific, we're about flat. So if we're sitting on the sidelines, great, but I will tell you, each market, each territory is a little bit different. So you're putting in those big cities there that are actually going negative, which I feel that there's been some appreciation that we've actually shared here locally. But you can see, if you're looking at moving to South Atlantic, they've already gone up a 9.6% appreciation since year to year, and 7%, 5%. So this is on about a national average that's kind of cruising through here. And you can see the Pacific, on the Pacific coast, we are kind of flatlined there on that. But I want to share with you, have home value decline stabilized? Are we seeing stabilization in this? And I want to show that you can see back in January of 2022, yeah, the appreciation was really good. Things were going well. And then it just all of a sudden, boom, right around July and August and September, you could see that if you purchased a home in that, going on the national average, that you would have a slight depreciation in the value of your home. And then home prices did decline. But now that you're actually seeing that you can see this here on this one, that they are actually going back up, now that we have January's data, that now we are a little tick ahead of the appreciation. So we are past the peak of the depreciation and moving on a good. We're not out of the woods yet, but we're at least moving. All these numbers are sharing, again, clarity, and seeing the clarity of the market of what's basically transpiring here. So all in, home prices nationally are down about 2.6% from their 2022 peak. So we are down there on national, but you can see certain areas and certain cities are a little bit different. Moody's analysis repeat sales, HBR down 2% from the peak. And also then you got Freddie Mac's are about 2.5% from its June peak. So putting all these together right here, you've got these on some appreciation. So going back to those news articles, we're going to have 15 and 20 and 30%. Just didn't happen, just not happening. And you can see kind of looking now at the numbers that are actually coming through for we're able to see. So let's talk about, will we see affordability improve this year? So these are some amazing stats that were put together here, that each downward tick in mortgage rates is met with an increased buyer demand as many eager home shoppers take advantage of the slightly lower cost of financing a home. I know California, that we had a $300 million worth of monies that were the DREAM program that was gone in 11 days. That means 2,564 potential buyers actually took advantage of that. And that just disappeared in 11 days. That means that there's so many more buyers out there. The demand of buyers wanting to purchase a home right now are strong. And as we see the prices, stabilizing a little bit there and allowing these other buyers to come in with some better pricing, and with interest rates ticking down a little bit, this is a great time to buy. So look at this here, because this is a great, where the affordability has been, and this is the peak. So this goes back January 2021, where it was great affordability that we could, purchase property. And I'm going to show you some more statistics how this all comes together. But you can see here when we actually hit last year, we went into April, July, and October. It was very difficult. Our affordability index all the way across the board in the whole entire United States was difficult for a buyer to purchase a home from their affordability, because we need to look at three things. It's just not about interest rates. It's interest rates, it's prices, and it's wages. So you got to look at all three of those. So when you look at this, that if you start, your income starts going up, you can afford more money. So as the interest rates go down, prices go down, then you're able to do so. But I just wanted to share on this upward tick right here that you can see that we're moving back in a more healthy market, going from where the peak was and now getting closer to that of affordability. And you can actually look at this number here too, because this is kind of fun to actually see that we've got the years of distressed properties, and this was the most affordable time where anybody basically could get a loan on a piece of property. And so now we've actually crossed this threshold right here, and I'll share kind of what that is, that again, the numbers are looking better, that there's more people that can afford a property here. Because this one right here on this is that this is basically taking your, the indicates that there's a 100 line right here, that the medium income of, you have a medium income of, they can afford a medium household income to a medium house price. And so what we're seeing here now too is we just crossed that line. So all of this right here, we could actually have a lot of people who did not earn enough on the medium income to be able to purchase a medium priced home, which now it actually is moving. So once again, these numbers coming in from NAR are being better for us, and we're starting to see this climb as we come out of this, which is great. So you can see that this is the household all the way back in 2021. Again, national average, because I'm not sure on the East Coast or West Coast here, that in the East Coast as well, that we're seeing $1,800 monthly payments, because they're probably a lot higher. But you can see in October right here, again, once again, this was a payment if somebody bought a home back in October. The affordability of that, now it's about $200 less to be able to afford a home today, because of the three things: wages, prices, and interest rates. So again, another graph showing the numbers are going in more clarity where we're at. Of course, when you look at this number and this graph right here, when it comes down to the medium income as the columns on the left, and the qualifying income on second column over here. So here's your medium income for California or in the West Coast, but it costs about, or you need to make about $127,000 to afford a medium priced home. Again, cities and large cities and stuff are making that with the Bay Area, and they're millions and millions of dollars, kind of really tweaks those numbers. But you can kind of see right here that it is cost more money to obviously live on the West Coast. So when we look at these other numbers too, is that you assume that you have a 30-year fixed rate here. And this is basically that all the lenders, most of them want, and Freddie Mac and stuff would like, according to NAR, that have 25% of your expenses, not more than 25% of your expenses, would go towards your house payment. And so you can see that this was very affordable back in here in the January 2013, nice affordability. And then all of a sudden it just kind of from January 2021 just kind of spiked, that it was stating that more people could not, your house prices just got out of control. They just got out of control. They couldn't be able to do that, be able to pay that money and to keep it under 25% debt to income ratio on your house payment. But now what you're seeing here is the numbers are moving back under that 25% mark, which is very nice to be able to see that as well. So, however, this rate drop has enough to make homebuyers affordable again for many Americans. So I just want to share that with you guys. Positive news here is that the numbers are all going to the right directions to be able to have a more buyers be able to afford these properties. I've been able to get into a lot of first-time home buyers rates right now as low as 5.2, 5.7, locking at those rates, having a buyer buy down rate with the seller, negotiating that into a contract. So I hope, guys, that these numbers and this information is helpful for you, because clarity is so important in this world today. And if you like this video, please subscribe and reach out, contact me. I'd be happy to help and assist in anything you need regarding real estate. Take care. Bye-bye.